Strong demand for Spanish debt, positive German data, positive US data, and it appears that all helping to spur the risk rally. How long can it last for?
Yeah, it's going to be interesting. We actually looked and found out historically these next 2 weeks are generally quite positive. So I think definitely until Christmas you could see some good demand for risk again.
And as we say, we've got that euro sitting at 131. The big focus today, I think, for the market is going to be the demand that we see coming through for that those 3-year loans from the ECB, and that, of course, will give an indication of how this might alleviate the funding crisis that we have over in Europe.
Yeah, definitely. I think you've got to keep one eye very firmly focused on the peripheral European debt. The Spanish yields had a good day yesterday. Got to keep an eye on the Germans. There's some news that Moody's are putting on watch both France and England. So yeah, it's all going to be an interesting couple of weeks.
Let's focus in on the banking sector. At the beginning of the week, bank stocks, particularly in America, were hard hit. There are a lot of concerns around how Basel III capital requirements are going to undermine profits. Looking at South Africa, though, it's not really capital adequacy ratios that we're worried about here. It's more the growth story that we're going to see in 2012, with concerns around muted growth, and that, of course, impacting the bank sector.
Yeah, definitely. And I think, our banks have been very shielded from what's happened globally, and I think everyone knows that, yeah. A very interesting fact here in South Africa, we've got 9 million unbanked subscribers here in South Africa. So, the likes of Capitec, Absa, Standard, all of the majors are certainly gunning for that business, and I think that's where their growth is going to come from.
Yeah. I mean, that's why you have the likes of Capitec saying that Africa is actually not a focus for them right now. Despite the market there being largely untapped, there's still so much growth potential in South Africa.
Yeah, most definitely. The banks here, I saw just an article on, the banks are out there hiring because they know that they've got so much of an untapped resource here. So guys are definitely going to be fighting for that market share.
Absa is your top stock pick in the banking sector from more of a medium to longer term perspective. The stock's fallen around 2.6% this year, sitting just above 138 Rand, pretty much in line with what the banking index has done for the year. Why Absa over the likes of Standard?
Yeah, I like Absa. My biggest concern with them at the moment is, they are a large majority owned by Barclays. Why I like them is I think you can get them fairly cheaper than what they're trading at the moment. The biggest concern for me with Absa is that these European banks are going to come under a lot of scrutiny because they're missing profit estimates quite dramatically, and they are going to go to the likes of Barclays. They're going to say, well, which assets of yours are making considerable money, and Absa is one of them.
So you're concerned that they actually might be coming to Absa, Barclays, and coming for some capital boost there?
Yeah, exactly. Or even saying, what, guys, you guys have done fantastically well, maybe possibly even selling their good assets like Absa. Absa is a fantastic bank. The wholesale banking market has dried up dramatically, but they've made their indication that they want to go for this untapped resource, and I think that they're looking to do that quite aggressively.
Woolies is also one of the picks that you have in the retail sector. We know that it's been one of the strongest performers this year. Returns of 50%. I mean, any shareholder in Woolies is really smiling as we go into 2012. Interesting that they've been making the headlines actually as of late. A big David and Goliath, the situation playing out with them saying that they're Frankie's soft drinks saying that they've stolen their intellectual property. But I suppose this is more of a localized issue, and from a more company strategic point of view, Woolies appears to be on a stronger footing.
Yeah, definitely. I think they're very expensive at the moment. I think trading on a PE of around about 18, but good set of results. Earnings per share up 30.6%, turnover up dramatically. They pay a very, very good dividend. They have been included in the top 40 index, which is fantastic. Obviously, a lot of tracker funds will start buying into them. They also announced, once again, very key, that they're looking to expand into Africa very, very soon. They've just opened up 2 new stores in Nigeria, and with view of opening up 120 stores in Africa by 2014.
Very aggressive and interesting that they see potential in the upper end of the market, which is, of course, where they play. From a pricing perspective, though, as you say, looking extremely stretched at this point, sitting at 38 Rand, where would you advise investors get into? At what point in time would you be looking to buy?
Yeah, I mean, also we look at a lot of technicals, and I think timing the stock is going to be critical. I mean, a classic Head and Shoulders as stock is showing at the moment. So I think about 33, maybe a 30 Rand if you can possibly get somewhere around there.
So 8 Rand below where it's trading. Stocking fillers as we go into 2011. The two stocks that you've picked are Astral Foods and Windhold, a small cap company, of course. That's down 30%. Let's start with Windhold, because I think that's an interesting investment holding company that you're seeing some strong upside potential for.
Yeah, definitely. I mean, I think the key for going into 2012 is going to be looking for yield. This is certainly one stock that's got the history behind paying very, very good dividends. I mean, historically paying anything between 8 and 10 cents, around about R1.20 at the moment. Profits did miss estimates, but purely on the back of, their Gundle side of things, where they're manufacturing. They said that there was a lot of strikes. They got severely impacted by a lot of the strikes that went on. They've got a lot of cash at the moment. And like you say, it's a stock in filler. The net asset value of R1.99, so trading at a very deep discount.
As you say, sitting at 121. Very quickly before I let you go, Astral Foods, 124 Rand, another stock pick for 2012.
Yeah, definitely. Also a fantastic company. I think the Rand, with what we've seen, what's going on with the Rand, is going to protect them a lot. They've got a lot of cash on the balance sheet, very, very good dividend payer. These are all safe stocks, but I think safety is what you need going into 2012.
Yeah, on that note, we'll leave it there. Oliver, thanks very much for your time.